There are numerous methods that the IRS uses to prove understated income or overstated deductions. The government may use the direct method of proof to show specific items of understated income, such as unreported bank accounts, undisclosed stock, or real property sales. The direct method is generally used if there is a difference between gross income received and the amounts reported. It is generally used in false deductions or significantly overstated expense cases. The net worth method is where the government attempts to establish your net worth at the beginning and then show increases in net worth for each year, accounting for non-deductible items and excluding non-taxable receipts, and then comparing the net worth at the end of the several years in order to show underreported taxable income. This method is used when the taxpayer has not kept adequate records or if the books and records are inadequate. The expenditures method utilizes a sources and uses of cash test to show that your uses of cash exceed your sources of cash, thereby proving unreported income. You can't spend that much money without receiving income or proceeds to support the expenditures. This tax law firm will conduct our own sources and uses of cash test so that we can build up all possible defenses, including that the expenditures may have resulted from cash and assets on hand at the beginning. We will establish with independent evidence that there are sufficient non-taxable sources to support the expenditures and investigate all relevant leads. There are many defenses to each of these methods that the government will use against you. Early representation is critical for damage control, as there are many matters that can be resolved early in the investigation to assure the case is not prosecuted. This tax law firm will conduct a parallel investigation in order to thoroughly advocate each and every defense. There are numerous badges of fraud that will move the case from a civil tax audit to a criminal tax investigation. These include a double set of books, making false entries, false invoices or documents, destruction of books and records, concealing assets, and any conduct which would mislead or conceal income or assets. Badges of fraud also include omissions of large specific amounts of income or entire sources of income, fictitious or overstated deductions, attempting to deduct personal expenses as business expenses, accounting irregularities, false statements by the taxpayer or his power of attorney, transfer of assets out of your name after being notified of the audit, a consistent pattern over several years of underreporting taxable income, failure to cooperate with the revenue agent during the audit, significant dealings in cash, and not filing tax or information returns in an effort to hide unreported income. This tax law firm will look at your education, experience, and particular expertise to build the facts to defend against these alleged badges of fraud. We will marshal the evidence to prove that mere accounting or bookkeeping errors or your failure to file complex tax laws does not amount to tax evasion.